Today, it's Edwin's Monday evening property rant. Hello again, it's Martin North from Digital Finance Analytics, one that is post covering finance and property news. Monday evening again, Edwin's back. And Edwin, a lot to talk about this week.
Martin, love is in the air. Love is in the air. There's lots happening with auction clearance rates. Investors are falling in love with the property market, and Valentine's Day just around the corner. So what more can we want, Martin? What more can we want?
Well, what we don't want is a rate rise, which we got last week, of course.
Now that'll be a divorce. That will mean a divorce.
But I am fascinated by the conflicting signals, shall I say, from the property market with regard to how is the state of play. And I made a show the other day really highlighting the fact that the mainstream media are once again peddling their barrow. Just remember, folks, a lot of these online commentators are, of course, very much linked to the property market. So my show was the hot auctions, which are not so hot, and we might touch on that as we go forward. But just to say that I did a little bit of analysis of the Catality data, and of course the true clearance rates is always a lot lower than what it is that they might say. But fascinatingly, I'm very interested by all of these little signals about what's going on. And here's another little signal. This got sent to me by a number of people, but this was a property advertised for 599,000. But the same property, well, is it the same property? Is it AI enhanced? I couldn't understand. Are you allowed to AI enhance your real estate adverts on the portals? What do you think, Edwin?
Look, there are a lot of regulations around, and the regulations are very clear when it comes to doctoring the images that are put on online. But look, with respect to that particular image, I think in part it got taken out of context, and we're clear and transparent with what we say. I had a look at it. I actually went into the Reddit. The Reddit post. There was a link to the listing, and I looked at the listing, and look, the agent does say this is what it potentially could look like, and the leading image is the older or the realistic version of the house. So it does have that. So it did get taken out of context. And again, this is unfortunately where a lot of what you and a lot of what I say, gets buried by a lot of emotion from both sides of the fence, man. This is why we try to be clear and transparent on the show. Just put the facts out there, put the things, because we've taken other commentary to task that would otherwise fall in favour of what you and I say on the show, right? But we pull it apart. We pull the reports apart. We pull the commentators apart, and we look at where is it going to lead. And in this case, look, I'm sorry to say, but most of it was clickbait. But having said that, we are going into the realm of what is true. Right, where an AI is doing it, and that's not only just a representation of properties, but representation of information. Because a lot of agents are using AI-generated information, but the thing is, those little AI bastards, they're some of them are real good liars. We've seen the case those what are they called? I don't know, channels, characters. I don't know what they're called, but they're little liars. And I mean, we've seen the likes of first-tier law firms put together what is it, $400,000 reports given to the government that have been generated by AI, and some of the information there with referencing to cases that have been made up, and citations that have been made up. The sad thing is whether it's the real estate industry or whether it's a lot of other industries, I think the general public are being dumbed down if they don't have experience in the arena. In the arena of real estate, if you're just going to rely on AI and AI reports and buyers agents that give you, lead you to investment properties by just showing you desktop generated AI reports or laptop generated AI reports, and they don't even inspect the properties, which is what I put up there after I saw the post online. I said, well, that's when you start getting into a lot of trouble, and that is when you're going to rely on AI generated reports by so-called buyers agents, which is part of my industry, and they've never set foot in the property. So that takes that whole aspect of caveat emptor to another level, where people will really need to pay attention, and they really need to, before they hand over tens of thousands of dollars to these so-called experts, buyers agents, selling agents, whatever. Do your own due diligence. Check it out. Check things out. Research. And if you train your AI character well enough, you'll come closer to the truth than most of the people that are using AI out there. And look, for a little bit of an infomercial here, Martin. Next week, Dusty and myself, we're going to be conducting a banquet where we've got some of the leading AI experts around the world. We're going to be having a banquet with them, a dinner in Sydney. And the topic of discussion in the banquet is going to be where AI and IT meet real estate. So it's going to be an interesting night. So I'll have a bit more to share as to what people shared on that banquet. But that's middle of next week. So we'll have something to say further down. So there is a lot of interest. There is a marriage, a sort of relationship building. There is a little bit of a love affair between the two. But it could go pear-shaped if you don't match the right partners.
Well, it is interesting. If you use AI carefully and you prompt carefully and check what the results are, it can be quite useful. But I do see a lot of misleading information being presented as fact, when in fact it's an hallucination, and that, of course, is the problem. But more broadly, just to underscore caveat emptor, we keep saying buyer beware, buyer beware, buyer beware. Don't rely on somebody else's story about this particular property. Don't rely on somebody else's survey of the property, for example. Do your own work, do your own due diligence. And in fact, you put this post up. Could this have been avoided? Buyers beware. New owners told all bathrooms in the house were recently renovated prior to the purchase. And we're also told it was done by a reputable local builder that owned the house. Well, yeah, when you actually look at it, it's not quite what it was said, right? Couple of examples here, Edwin.
Yeah, this is. They go to my my Twitter handle, and they can actually have a look at the version of the video there, and it's a poor buyer. They relied on reports that were misleading in somewhat, or not so much misleading as much as omitted some of the clear points. And if you know what you're doing, if you know what you're looking for, the photos that you're showing there on the screen, that's the evidence. That's what should have been reflected a lot more clearer in the building report than just saying, there could be, maybe, possibly, further investigation is required. Now, if you had that in a report, that's alarm bells ringing when you've got the when you've got the outer gyprock wall of a bathroom swelling, paint peeling away, and it feels damp. So you have to say, hey, I think think the waterproofing's failed, let alone when you got the door jamb, also swelling at the base. And so this were across both main bathrooms where they have shower recess areas. So it could have been avoided. It should have been avoided, but for the reliance of emotional buyers on a property and the pressure that they're under, because a lot of people need to make quick decisions. And this is why I say where the industry has hijacked what the governments were wanting to bring in to make it a lot easier and a lot less costly for buyers to do the due diligence. So the other side of the industry hijacked the whole process and used that as what you and I say, use that as a marketing strategy to promote the properties and to fast track their campaigns. So we're going to be sharing a little bit more about this later on in the show, and we've got a big surprise for our audience as to who potentially going to come on our show next week, Martin. And it's a show that should not be missed, because we're going to have a real expert that's going to talk from the grassroots levels about what's going on and what she feels should happen, which is what you and I have been talking about for the last 4 or 5 years. We've educated our audience. Our audience by far are well ahead of the pack. Whereas the rest are just trying to catch up, and the poor bastards are getting caught and spending tens, if not hundreds of thousands of dollars post-purchase because they haven't watched our show.
Well, I should look forward to that, Edwin, and we'll disclose a bit more about that later in the show. But I guess this is ever so important just at the moment. And in fact, on the education story, on Tuesday, tomorrow, in my live show, I'm going to do a deep dive into our household and property data. I've had a lot of people send over postcodes that they want me to look at. So we're going to go through a deep dive, looking at individual properties, trends down at the postcode level, looking both at the stress data and also at the price trend data. So that should be quite interesting. And I think it's really important at the moment because there are so many noises off, as it were, with regard to what's going on in property, that it's very hard for people to sort of sift out the signal from the noise. I made a show called Home Prices Busted, where I went through the prop track data because, of course, the momentum in prices in some areas is easing. But I would remind everybody that we've still got this massive gap between the actual median price and the capacity to pay. That's a really, really big problem. Not helped, of course, by Bullock effectively lifting those rates and saying what the inflation was a bit hotter, so 25 basis points. There was a very interesting article from Christopher Joy, quote, "The RBA has no idea what it's doing right now. It's caught in the middle of a tug of war between the preferences of its political masters and the policy constraints imposed by the hard data. The casualty is its credibility." Well, I would say, well, yeah, but the casualty actually is people with big mortgages who are up against it. Oh, and by the way, very interesting, as this article showed, everybody, the banks reacted and passed on those rate rises immediately. We know, according to the CBA group executive, we know that interest rate changes can create additional pressures on our home loan customers. Well, that's very true. So we're going to look at that tomorrow. And I'll just in passing mention Alex Joyner's commentary on the latest ABS data, the monthly household spending indicator, which over the quarter was actually quite strong, but over the last month, not so much. But I want to highlight that the spending is very much in some areas, but not in other areas. And the overall acceleration of 3% really masks a few important things. Now, just be clear, everyone's saying that one rate rise won't be enough to cut inflation, which is probably right. And of course, that puts the government in a quandary. But guess what? They're now wondering about, well, maybe they should suddenly bring forward this capital gains tax discussion. It's funny, it's just popped out the woodwork, isn't it? And it's interesting that there was an article suggesting that the CGT discount to cost $247 billion over the next decade. And interestingly, they suggest that those who are more affluent tend to benefit from it the most. Although they did also make the point that if you actually change it, then potentially some of those like retired and waiting for their taxable income to fall, and we're thinking perhaps of dealing with it then, might be the most affected. And here's a little interesting angle here. So there's an argument suggesting that the next tax slug, Howard says, no. But actually, here's a chart that shows that when the capital discount gains began, we started to see this break away between dwelling prices and household disposable income. I would want to overlay migration on top of that chart to get a better story as well. But coming back to the RBA, these two little cartoons, the burnout economy, why aren't we slowing down as the RBA tries to pull the brake of interest rates while Chalmers is stoking the economy like mad? Or this one, which I thought was quite good, when Bullock actually said government spending as a component of aggregate demand to the extent that aggregate demand is outstripping aggregate supply. Fidget. Michelle, hello, the script. So there we go. We are in a very interesting situation. That's why it's really, really important that people actually stand back and think really, really hard about those decisions. And therefore, this idea of better education and really focusing in on and getting the caveat emptor story going, the buyer beware story. Don't just take the high-level waffle from the media or even the high-level waffle from politicians. There are really critical decisions for real ordinary people to make when they're thinking about property. And, we'll do our little bit to try and spread the gospel, Edwin, and help people to make better decisions. We don't want to be anti-property. We want people to make good property decisions.
Yeah, this is where, as I say, a lot of people sell property based on emotion, and a lot of people buy property based on emotion. And this is the articles that you brought up earlier on, part and parcel of that as well. And emotion plays a role into those that have got investment properties and those that are looking at looking at the articles with respect to the cutting down on the CGT. Well, let's not forget that you pay that when you sell the property. So unless the government are going to tax you on future gains, unless there's going to be a future tax involved, well, but what happens when you've got this sort of when you've got this like I said, announcements? For me, look, the smarter investors, the smarter property owners are going to be holding, and at the end of the day, they don't sell. They refinance on the equity. So you're going to pay the tax, whether you pay the high end, the lower end, the middle end, whatever, you pay on the sale, not whilst you're holding the property. And that's one thing. But emotion does play a big part in and there's a knee-jerk reactions, and we may see numbers climb. We may not. Time is the one. Time will tell. Likewise, if you recall the sales tax that back with when Carr was in heading the. At the helm of the New South Wales Labor government back then, when they wanted to introduce. I hope it was Carr. They wanted to introduce the sales tax, the 2% sales tax levy on investment properties, and guess what happened at that time? Shit, a lot of properties went on the market. And again, emotion, knee-jerk reactions. Hey, dipsticks, you don't have to pay. You didn't have to pay the 2% impost or tax on the sale of your property unless you sold. Simple as that. But it's these knee-jerk reactions, right? So, and this is why we look at the numbers very closely, very carefully. But now, and we see who's going to be keeping longer, or who really wants to, who's really going to sell. Yeah, the older homes. People are going to make that decision. In my educated opinion is that they're going to make that decision to sell, because they don't want to take the risk, especially those that were bought, investment properties that were bought in the 70s, 80s, and they need a lot of upkeep, and in areas where the weather plays a big role in the deterioration of the integrity of the buildings. So they're going to come on the market. Because because the investors are going to be retirees. The investors are going to be wanting to cash out, and they say, well, might as well cash out now. If it happens, if it doesn't happen, well, better do it now than in 12 months' time or 6 months' time. But as to how many come on, it's anybody's guess. So far, the numbers aren't reflecting anything, any knee-jerk, but I do expect numbers to come up a little bit. So when you've got, so likewise, you've got similar stories on the other side of that equation, and that is when that people get pushed in to buy. So we're going to look at certain numbers, and we're going to talk about some numbers as well with regards to the talks of the potential interest rate rises before last week and around, and what the industry have been saying over the weekend, what they've been telling me. Try to get a sample as much as possible from big offices that I communicate with across Sydney, so we can get an idea as to what's really happening at grassroots levels, and also other information in order to bring across information so that our viewers can take it or leave it, right? So this is the thing, Martin. A lot of it is just emotional knee-jerk reactions, but some will fall for it as well. But the interesting thing with that story, Martin, and that is that I believe our leader Supremo is putting his investment properties up for sale. So who knows? He may actually be the light at the end of the tunnel for many. That because if our leader Supremo is selling off, I guess I would say, it's on if Chalmers starts putting his investment properties up on the market as well. So if Chalmers that, then we know it's on. Until then, I'll just let's wait and see.
Well, I do think it is very interesting. There are, social media full of Albo effectively perhaps getting some of his investment property shot, taking advantage of the current tax breaks. So we shall see. Just mentioning those individual comments, we might go through them now because they're very relevant to what we've just said, which is emotion, right? There's a lot of really interesting things. So here is effectively your little conversations. Just go through them.
All right. So far, the market's not phased by rate hikes or rumours of another hike. Yeah, look, this is the first one there, the one on the top left there, that's in the northwest region. He himself, Nathan himself, he's currently carrying with him in his small team in a big office. He's carrying about 22 to 23 listings. So to get an average of 10 groups on the open houses, and very few have bought up. Only a handful of buyers is saying that bought up that discussion is really, it's really telling. So it's not just one individual real estate agent with one listing or two listings. He's carrying about 22 listings, or him and his team, and he's a part of a big office, five to seven, call it six, selling agents in that office. Then you've got another one in the eastern suburbs. He's saying that the turnout was great. Now, he's carrying there in the eastern suburbs, he himself and his team is carrying about 15 listings, both apartments and freestanding homes, strata title property and freestanding homes. The other chat there on WhatsApp, he's in more towards the mountains. Again, so this is what people are saying from offices, big offices in different regions of Sydney. And then there was one that I pulled out from Adelaide, that I saw on there, Nathan Castley, that what he's talking about, what's happening in Adelaide. We don't follow that market, but it's just a trend of what people have been saying across the industry, that there's not much talk. But remember what I said in the last show, Martin. I said that we would really need to get that 3-4 hikes in order to put a dent in the demand that we have, as well as pull back on immigration. So we know that they're trying to fudge numbers here and there with regards to immigration, and whether or not we get the other 2 or 3 hikes this year is anybody's guess. But in the meantime, we look at what's the numbers are, what they are on hand in certain suburbs and in certain areas of certain suburbs, because we go granular.
Yeah, granularity. Yes, my friend, our friend, very important. Again, to remind everybody, tomorrow our live show will be going into some granular analysis. And it's really been fascinating. I've been profiling the individual price movements over 10 years of properties in a particular location and looking at the stress data and everything else. So it's a really interesting granular piece of analysis. And I do think it really helps. I've had a few inquiries actually from industry over the last few days for more information about this very idea of getting more granular analysis of what's going on. So that's fascinating. Now, one of the other interesting things that's popped up, of course, recently is the idea of modular homes or tiny homes. And I just want to spend a bit of time on this, Edwin, because there are some interesting little developments. This article, of course, from the Fin Review shows that Bunnings is going to start selling DIY tiny homes as housing costs pinch. And they're saying Australians can build a tiny home, office, or extra bedroom in their backyard over a weekend for $45,000, with Bunnings partnering with a modular home flat pack. And elsewhere, Pods, a luxury tiny home builder, says prefabricated pods in a range of sizes from full double-story tiny homes to 2.7 metre wide rooms. And then you arrange, and they actually have a little bit of examples here. This is, flying one in. It's, I think, a little bit of a fallacy, though, to say that this is going to be the solution to our housing problem. And, of course, you've also got this other question, Edwin, which is, what about planning and regulation? Because, in fact, depending on the type of modularity and the size and the shape, you can get tripped up quite quickly, can't you?
Oh, definitely. One of the things that you need to consider is a lot of these modular homes or tiny homes or these flat pack things that Bunnings are going to be selling there. You not only got to think about the cost, but you've also got to look at, you can see the crane there, craning this thing over, it's like craning a pool over over a house because there's no access. Unless it's flat packed and you can put it together. That's transportation and delivery is an added cost to that. The other one obviously is plumbing it and getting power. That's got to be compliant. You don't necessarily need council approval with a lot of these tiny homes and modular homes because they're considered not to be, in a lot of councils, they don't consider them as fixed like a normal dwelling, like a studio or a granny flat. So that can be portable, so therefore you don't need to go through the full red tape. But I will take into account, and I want to inform our fellows and our viewers that Dusty and I have set up a company, and it's called We Fix Bunnings Tiny Home Installations, because there's going to be a lot of stuff-ups. All right, so that's a company. Anybody that wants to join in on the venture, DM me. We're open for stakeholders, shareholders, and because there's going to be a lot of stuff-ups. The other positive note to this, Martin, to these stories and these tiny homes, is at the next election, I feel that any political party that is going to be promising anything bigger than a cubby house is going to win the election. So that's the way we're going. Give me your vote and I'll give you a tiny home. Could be the slogan, or give me your vote and I'll give you a pod. Could be a slogan for the Liberal Party. But it's not. It's unless you address other aspects, other areas such as immigration and medium density development and red tape and infrastructure out in the outer regions of the capital cities, and more importantly, which I've been thinking a lot about over the last few weeks, and that is, unless you reinvest into townships, into towns beyond Bathurst, beyond Orange, beyond even parks, unless you start investing into the real outer regions and start rethinking how repositioning rebuilding or re-establishing financial institutions in these towns, which you and Robbie Barwick have been talking about for many years, is that's what's decimated that's what's added to the regional migration into the capital cities. That's what's added to the state migration into New South Wales as well, because a lot of regions in a lot of states have also been decimated and they can't get work. So this is the whole thing. So you have to look at all these aspects in order to solve the problems that have been created in a lot of the capital cities. Other than Melbourne, because everybody wants to get out of Melbourne. Who wants to?
Well, yes, we'll touch on Melbourne as we look at the numbers, because the story is a little bit concerning there. But it is worth just reflecting that people pile into the greatest new idea, and then regulation has to react and respond. The risk with some of these more temporary structures is that it's not really as waterproof over the long term. And of course, it may be less well insulated, which means that it might be colder or hotter. Electrical, plumbing, all of those things. And I remember having a conversation some time ago with a follower who decided that what she wanted to do was to establish a small pod in her garden. She'd move and live in the pod and then let out the property that she currently lives in, right? Which is an interesting strategy, but if you think about it, there are pros and cons. But the point is, there may be some changes to regulation later. And talking about changes in regulation, I want to link that with the EV story, right? Because of course the EV story has been propagated for a long, long time as the solution to saving the planet and everything else, right? But as this slide shows, maybe there's another side to it, and now people are beginning to talk about the concerns from the lithium-ion batteries found in EVs, and ferry companies and underground car parks are banning EVs. Insurance companies are refusing to insure them, and owners are struggling to sell them secondhand. So there's a swing and a roundabout when it comes to some of this stuff. Now, I don't know whether that's the full story or not, but we've been talking about this for a little while, Edwin.
Yeah, look, you and I have been talking about it for a while. We've been talking about the many ways that the strata developments have to bring the circuitry, the main switchboards, the local substations. All that infrastructure has to be rebuilt, especially around the older areas, the older apartments that have been built in the 50s, 60s, 70s. You've got to upgrade them, even to the point, as we mentioned a few years back, with regards to induction, cooktops, where the pulling 32, 33, 35, 37, 38 amps, and the allotted amperage to a two-bedroom apartment that was built, in an apartment block that was built in the early 70s, is around 30, 32. And so you turn your cooktop on, and then you put an air conditioning unit, or you put the TV on, whatever, or put the blender on, and then you blow your safety switches there, they trip. So all these things are going to be thought through. So a lot of this information, obviously, in what was on that article, is to do with the lithium batteries, with these. You've got these electric scooters. The airlines are become very very cautious about the rechargeable packs that people take on board in the carry-on luggage, or you can't put that in your in your main luggage. You got to have it on your carry-on, and you got to keep it close to you, just in case anything happens, because of all that's how a lot of these devices become unstable. So moving forward, look, what I saw in China, I didn't I forgot to put it up on our document, but I will share it after you share the rant on X. I'll put the photo that I took of a stair, an elevator in an apartment complex, where there's a great big sign there saying, "Do not take your beyond the, no basically no lithium battery, no scooter, no beyond this point. And they're very strict about it because they know. And it's all about numbers, Martin. It's all about numbers. We may not have had the incidents that other countries have had, like China, and what we see there, because obviously there's a hundredfold more than what we have here. But it's only a matter of time before they start becoming more realities here. But also moving forward with the changes in what the government wants and and getting rid of the fossil fuel engines or the internal combustion engines to electric to EV. You got to think of all these other things. You got to think of all these infrastructure that is got to be built. Now, more importantly for our followers and our viewers, that living strata complexes, whether you're a tenant or whether you're an owner or an investor of a strata complex, check your insurance. Check your insurance, because a lot of insurance companies are starting to talk about this, and you may not be covered. I'm not saying you won't be. I'm saying you may not be covered. Because a lot of the changes have been made, and you've got to really think, and you've got to read the fine print. And this is where property management teams have also got to get across it and find out whether or not these strata complexes that they're managing, the individual properties that they're managing in these strata complexes, whether or not they themselves are covered under the professional indemnity insurance in it, because at the end of the day, they are the agents. They are the conduit between the landlord and the tenant, and the tenant's belief is that the property manager has done all the due diligence to protect their well-being, and that's why they're paying rent. It is a contractual transaction, and that property has become a business. And there are a lot of obligations that fall on the property managers as well as the strata managers and so on. So it's going to be a very, very costly affair moving forward with a push and the government push for high-rise development and everything else, because anything that's built with regards to high-rise development has to come under the new codes, has to come under and has to facilitate all this. So it is a minefield. And this is why I keep on saying, if people think that building new is going to get cheaper because we're bringing in massive amount of people, even if the figures were true, which they're not, of skilled workforce to assist with the construction side of things. You can bring as many as you want, but the actual regulations and what is demanded under the new policies, under the 2030 pushes and cleaner energy and all this, it's just crazy. What all that will add on to the cost to build, especially in the high rise.
Absolutely. No, I think as always, what you see is that the regulatory processes don't necessarily keep track with what's going on, and they have to try and retrofit stuff. And in the meantime, people actually end up in rather bad situations quite often because of that. And as you say, what appears at one point in time to be, the solution to mankind's problems, whatever they are, a few years later, you just look back and think, well, actually, maybe not so much. Now, another one that I want to touch on, I've seen it in my surveys, is the small business story, because there's a lot of focus on mortgages and there's a lot of focus on the issues relating to individuals trying to buy property. But there is another story here, and it's the story of small businesses. And it's interesting that you've picked up here Mark Boris's commentary relating to his particular story. An alarming 6,200 New South Wales businesses went insolvent in 2025. And in fact, he's talking about a particular podcast where he spoke with a business owner who effectively had difficulty. And you also link that with half of Aussie small businesses now considering closing the doors, which is, of course, huge pressure. And this is a story, I think, that needs to be told, Edwin, because at the moment, I don't believe that the mainstream are really onto this issue. But for me, this is a really critical issue, not least because a lot of businesses, small businesses in particular, quite often have their business associated with their mortgage and their property. So it's not like it's sort of over there. It's actually right in the middle of this maelstrom around property at the moment.
Yeah, it's cross-collateralized. They've drawn on the equity of the principal place of residence in order to start the little business, to start the little coffee shop or deli or whatever the case may be. And the cost of running a business hasn't become cheaper. It's become harder. There's it's being overlaid over the last decade with more and more compliance. As we've been saying with regards to the real estate industry, we've walked into 2026 and the race is on. I'm hearing registration for the AML compliance and to register your business. I mean, it starts at $5,000 plus. That's on top of everything else that you're already spending, and on top of the stricter workplace industry regulations as well, your staffing, and then if you run a big enough business, then you've also got unions to contend with. So it is a big issue. But I took this into account for our show because I took an interest to talk about it because of that, what you just brought up, because of the fact that a lot of these businesses are cross-collateralized with principal places of residence, and when you start talking about statistics from MYOB's reports, I mean, this is serious stuff. So if people read through those posts and what these people are saying, and this is where also a couple of those that I sent you have got to do specifically with Melbourne, and this is what I say, where you've got to even stricter or more governance or more compliance they have to abide by. This is why I say that there's going to be a big exodus. One of my predictions is that there will continue to be a big exodus of people, families, small business operators, small industry, the SME sector, and now we're seeing this across different platforms. So, the real estate, what will happen with a lot of this real estate is going to be is one of the big questions that will yet to be answered. Obviously, they won't be turned into rental. They won't be turned into residential accommodation of any way or shape or form because they don't fit the purpose. But you will start seeing a lot of from Melbourne. You're going to see a lot of these main hubs potentially collapse. And if that starts happening, you've got your exodus, well and truly, on the front foot. Now, the other side is the government's also going to be looking at this very closely. And this is why I don't believe, nor do the WeChat chatterers believe, that the immigration numbers are going to be pulled back. Whether it's the Libs or the Labor Party that take the helm or continue to take the helm, because they need more money, and if they don't find it locally, they've got to bring it in from abroad. But this is where we talk about the shifts and the changes of visa codes and visa numbers and what they name them. But that money's got to come in. Now, one of the points to that, or one of the receipts for what I just said, is the fact that we've got two major developers, one from Japan and one from Singapore. There we are with hundreds of millions of dollars starting to invest in residential development in Australia. So they're not going to be piling in hundreds and hundreds of millions of dollars without a return, Martin. And they've got to be assured, and the government's has got to have given them assurances that they're going to get a return on the investment. And we're talking about well-standing companies, as I said, from Singapore and one of the biggest developers in Singapore and in Japan. So Now, if locals aren't going to be able to buy the properties, who is? I mean, there's your, it's a rhetorical question. Who is? So wink, wink, nudge, nudge, say no more.
Well, and I want to broaden that conversation because, of course, there is the build to rent thing going off now. And I just want to remind everybody that those large international corporations have been given extra tax breaks to encourage them to come and build high-rise apartments in Australia. Economically, it's still quite complicated unless you actually can build property upmarket enough to command quite strong rents. So it doesn't really solve the housing affordability issue. Might do a little at the margin because in some cases they're almost being forced to produce a small number of cheaper properties as part of the development. But that's not where they make the money. They make the money from building the larger properties and then getting the tax breaks. And I've said before, and I'll say again, to my mind, this concept of build to rent is not solving housing affordability. It's actually making things quite a lot worse. And it is worth thinking about the implications too. You know, that earlier article mentioned specifically about the CBD wilderness. You know, Melbourne's CBD is an economic wasteland. It's sliding into an economic wasteland, and every single City of Melbourne councillor should treat that as their number one priority. The warning signs are no longer subtle. And not only are the employment rates moving the wrong way, but also if you look at what's happening, some of the buildings that were at one stage offices, you know, they're being repurposed. There's a lot of new building going on, but it's not necessarily creating a thriving economic centre of gravity in and around Melbourne. And that means that there's a significant implication of this change of strategy. And I do think that the build to rent element is part of the problem, not part of the solution.
Yeah, and this is what you see in a lot of, not only Melbourne, but you also see it in Sydney. You see these mixed-use developments that have come up, that spring up everywhere, from Parramatta to Canterbury on the main roads, for crying out loud. Yep. I mean, how small businesses are going to survive there? And they think that the people that live above are going to come down and get the shot. You're crazy to lease out one of those commercial units, thinking that the residents on top of you are going to fund your livelihood of running a coffee shop underneath, only to find out that the adjoining 5 buildings and the ones across the road have also got coffee shops underneath them. All this sort of stuff. It's a shambles. Planning is a shambles. The purpose. What they're trying to do, so the only thing that's going to really be sustainable and affordable for people, for developers to really to build, and for them to they want to make money, and for the banks to fund it, they want to see numbers before they get funding as well. But obviously these bigger corporations, they need the local bank funding. They've got funding from elsewhere, but they still want to see a result, right? They still want to turn a profit, and I can guarantee you that they're not going to be turning the ground or putting shovel to the ground unless they're making at least 30% on the other side. And who's to say what sort of subsidies the governments are also going to be piling in there in order to make things happen, because they're falling behind with the numbers that they promised. They keep on promising the rest of the population that are going to be built. So this is one of those wheels that just keep on turning and turning and turning. A revolving door just keeps on going around and around and around. You get nowhere, people just got to start thinking for themselves. And the unfortunate thing is the Aussie battlers are the ones that bear the brunt of it, and end up having to tighten the belts a lot more. They end up having to live a lot further out than what they really wanted to, particularly if they want to raise a family. And the older generation are finding it more expensive to get older, and because it gets older and hard and costlier to get older, because to get older it's a lot costlier because of the medical facilities and what you have to, what's available and what's not available. So it's a big mess. Unless That's why, Martin. The sad part of all this is the solution. What are the solution? Yeah, maybe our followers and our viewers can tell us what are the solution do they believe the government has in order to sort this out. Because when you start talking about 65% of the SMEs are literally or potentially trading insolvent, that's a lot of business. We're headed for we're headed for a disaster. But I don't believe the government's going to allow that to happen. Or potentially just going to try to keep on throw those mattresses at the bottom of the cliff so there can be a soft as landing as possible. That'll drag this out for another 3, 4, 5 years. But we are where we are, and this is what's in front of us right now. So that's why we're talking about it, and it is alarming. It really, really is alarming.
And I'll make the point that the building and construction sector are overrepresented in terms of building failures. So the very sector that the government is aspiring to build more homes to solve the housing affordability, which of course is unlikely they're going to achieve their targets, is the very sector that's actually seeing more and more small businesses collapsing. So that tells you that the policy settings just aren't right.
Look, 100%. It's funny. It's funny that the penicillin, the solution to the ailment or to the wound is it's infected. It's infected itself. So there's nothing. This is where we are. This is 2.5, 3 decades of bad policy.
Absolutely, and no real insight at the moment. They're going to change trajectory, rather continuing to reinforce the mal-administered policies of a generation or two. Let's look at the numbers, because the numbers tell us something quite interesting too. So this is the Sydney numbers based on the definition from Domain for Sydney region, 21,443 on the 2nd. And if we go forward to the 9th, 21,907. And you've been tracking the Sydney story, but it is interesting what you're seeing, Edwin.
Yeah, look, one of the things that I noted for today was the fact that we've got a big increase in freestanding homes that have come up for sale. We've clocked to 10,000. We've been last quarter, the last quarter of 2025, and or the half of the year of the last half of the year of 2025. We were sitting under 10,000. We were in the mid 8,000s, and when you compare it with the 2025 averages of about 8,355, and now we've hit just over 10,000. It's interesting. To watch this space. As to what's coming on, and but also, buyer beware, because there's a lot of lemons out there. So that was one of the interesting points with regards to freestanding homes, is really taking the charge in the Sydney region.
Yeah, and I do see a little bit of that. Some of them are actually investment properties that need a lot of work. And some of them are in the outer lying areas as well. But there is a little bit of a change in the weather, I think. It'll be interesting to track this over the next month or two as we head into the autumn peak selling season. And I've had a few people reach out for me and say, well, maybe we have reached that sort of point where from this here on, prices momentum may not be actually moving up. Might be going sideways, might be going down. And therefore, maybe it's a good time to try and actually realize some of the gains that I've made over recent years. And I think the recent discussions about the CGT changes are also focusing people's minds a little bit and saying, well, maybe I should actually follow our Prime Minister and, get shot at some of the investment properties.
Which is not a bad thing. Which is not a bad thing from first-time buyers to on different levels. Not a bad thing at all. I mean, we welcome more houses on market, because that is the desired, and that is where the appetite is. Young families, couples, People just want to. You just need a bit of space, and that is the first. Your first preference for many. Melbourne, however, are sort of they're going all over the place, and they're pushing along very strongly with their numbers. So I think we're going to be cracking the 30,000 very, very soon.
Yeah, so 27,797 on the 2nd of February in Melbourne, to 29,153. And
a lot of new listings.
A lot of houses there as well. If you look at the 18,698 houses there, significant momentum, and only 2,872 lots for the land. So yeah, this is I think, I feel, I don't know whether you agree with me, Edwin, but I feel that the blocks are falling away in Melbourne. Literally, we are seeing now some very important early changes, and the price momentum is just ebbing away. Not universally. There are some outlying suburbs where there's a little bit of movement, particularly older style properties, but a lot of the expectation that people have seems to be going against the data.
Yeah, like I said before, I think people are jumping into Melbourne a lot prematurely. But there's a lot of and this is where you've got all these AI-generated reports. You've got all of a sudden this new phase or craze of laptop buyers agents or buyers experts or whatever they call themselves. They get the licenses in Queensland, and then they get mutual recognition all over Australia, and they sit in the basements of the parents' properties and push out information, and unfortunately people fall for it. Last week we found out that one of the hoteliers' brother-in-law, one of the local hoteliers here in the mid-mountains, paid an individual $30,000 to assist him with buying an investment property in Queensland. And I said, gee, you must have flown your brother-in-law first class up to Brisbane to show him the property and go through the property in detail. And says, what are you talking about? He just sent him a report, and my brother-in-law bought it. And I said, what? And he paid $30,000 for a report that he could have got for free if he spent even if he spent $100 out getting some CoreLogic stuff, he would have done a lot better perhaps. But this is what's happening, and this is what people are being fooled. And this is, but if you only have to stay on Facebook, Instagram, TikTok, and even LinkedIn for that matter, and in the day, you look at the feeds and you look at how many, most of the posts, or the majority of the posts that come through the general feed are buy in Melbourne's hit bottom, buy the dip, all this sort of shit. I mean, it's crazy. Each to their own.
Yeah. Well, we'll watch and keep our viewers and followers alerted as to the Melbourne trends. But I think carried Emptor absolutely. In Brisbane, well, 2,697 properties last week, 2,880 properties this week, and it's still a tight market there. Prices are still on the rise, although again in pockets, not universally the case. I'm seeing significant debt increases and significant financial pressures building in Brisbane. So we'll watch and wait on that one. But the auctions is interesting, Edwin. You've got some theories that things are not as necessarily the way that are being portrayed.
No, this is rather. I think this is a trend. It's a trend now. It's not just the numbers are continuously showing now as lower than 2025, which 2025 tracking overall a lot lower than 2024. So, but what I think it's also going to be. It's also showing us now, Martin, is the fact that there's underlying issues as well in the industry, and these are the stories that aren't talked about, which is less transactions are happening. there's some there's something more systemic happening in with the representation of the auction, because don't forget, the mainstream and the general public take the auction results as the heartbeat or the pulse of how the industry is tracking, right? So there are some things that the mainstream have to talk about that you and I have been talking about because less transactions, less money in the agencies, more that they have to rely on and pull down from principal places of residence, where we talked about early on with small businesses, the issues, compliance, everything else. So this is a watch this space for the industry and for the sentiment. We know that one of the main reasons, one of the many, is no different to what Barry Marksall replied to me on the post that I did on LinkedIn, and says 1990s owners moved away from selling to renovating and extending. If you sell it could be hard to find a replacement, which is true, which is what you and I have been talking about a lot, and put the selling costs and the stamp duty into the renovations. So basically, rather than spending that stamp duty when they've repurchased, and they also want to stay local, so they find that the inferior property, smaller property, less attractive property in the area is almost priced as much as theirs, which is a bigger land, bigger house, but obviously needs a lot more maintenance. There's not much of a difference per se when you start talking about the costs to sell and the costs that they have to stump up to buy. So they're better off staying, renovating. So this puts a lot more strain back on the industry, because there's less transactions, and the markets that are heavily reliant on sale by auction, and in those markets you're finding almost 50%, 30% of the volumes that we saw in 2024. There's the industry is in those areas are on their knees.
Yes, and I think that tweet of yours is really interesting, because you do pose some real big questions. Why are auction volumes thinning out? What do low volumes actually expose? Is it vendor sentiment and fading confidence, or is there a deeper structural pressure building beneath the surface? Because volumes tell a story long before headlines catch up. And I think that's exactly the point. We've been on this for some time, Edwin, and I think it's rubber hit the road time now for this particular trend. And my observation is that more people are skeptical of going the auction route if they're a vendor trying to actually think of selling their property. And the mix of properties that are coming through for auction are a bit different from what they used to be. The costs of actually going that route is still very high, not least because, of course, of the extra costs for the auctioneer and also the extra advertising and marketing and everything else. And the question is, do you get a better result when you actually go the auction route vis-a-vis the other routes that you could go? And I think that we're certainly quite skeptical in many parts of the market that auctions do offer a good route from the point of view of the vendor. But of course, the agent, because they can compress the time frame and can control the agenda a little bit more, is something that many agents still want to do. But I do believe that vendors and indeed prospective buyers are both pushing back at the moment.
Yeah, I just think it's so mate, I just had to laugh because, as you said, there's the auction route doesn't necessarily provide a good route because you get screwed at the end.
Very good. Well, we'll just let that ride, Edwin. Let's look at the rentals then. On the 2nd of February in Sydney, 10,882. Following week, the 9th, 10,320. In Melbourne, 11,032 on the 2nd, and 10,846. So a little bit of a decline, as you would expect at this time of year, with a bit more demand coming on. The rental story is still one of huge pressure, continued rental rises, and lack of good availability of good rental properties. And unfortunately, nothing that the government is doing is making any change to that. So this is a trend that's going to continue, I think, Edwin.
Yes, it is. And that's a sad part, because there's no real discussion apart from the post that you've made, apart from the stories that you put out and the videos that you've put out and what we talk about on the show, and that is the hidden rental increases that are not captured by the bonds. And this story needs to be spoken out, and what that's creating, and the fear, the emotional distress that it's creating out there, because people are living in fear that they're going to get a rental increase, and also in fear that the landlord's going to put the property up for sale, and where do you go? This is the whole social economic discussion that needs to be had, but nobody wants to have it, because hey, guess what? It's too close to the truth of where the political elites have put us have driven us into over the last 3 decades.
Absolutely. And just to underscore what you're saying, the headline advertised rates for property for rent, which is what the indices actually are driven off, don't tell the full story, because if you have a rental increase imposed, you don't necessarily have to put a bigger bond against it. And that means that existing renters are being hit over the head with 4x2s, basically saying, pay us more or get out. And I've made this point before, and I want to make it again. A lot of that initiative of putting the rents up doesn't come directly from the property investor. It comes from the agency managing the rent roll. And I'm really concerned about that, and the fact that a lot of this pressure is being driven by the real estate industry.
Yes, and this is you've hit the nail on the head, Martin, because the drive to push the rents up increases the value of the rent roll. So if at the moment, on average across Sydney, let's say a property brings in management fees, brings in $2,500, that property, the value of that property as a part of a rent roll is you multiply the $2,500 by 3.4, and that is the value of that individual management in a rent roll. So if you were to increase the annual return or management fees by $100, well, you've just increased the value of your rent roll on that individual property by $340 an ad, and that is the stark reality of it. Apart from what we're seeing happening in Victoria, Melbourne, Victoria, obviously land taxes, and when you see strata levies go up in high-rise developments, insurances go up, and all those fees, all those extras get passed on to the poor bastards that are renting the property, that have pretty much between a rock and a hard place, whether or not they move, and where do they move to, and what about the disunity and disruption to the family lifestyle?
Absolutely. This is such a critical issue. We're going to keep pressing on it, but we're coming towards the end of the show, Edwin, and we might just come back to that teaser from earlier on where you said we might get a bit of an insight next week from a guest. So do you want to just cover that off?
Yeah, look, and this is the tip for this week is don't miss next week's show, because what we will have on next week's show is Jenny Tunner she's a licensed conveyancer, and she's a board director. She's also the president of the Australian Institute of Conveyancers. She's pretty much on sees what we are seeing out there with regards to the before you buy, before you bid reports that are handed over, the glossy brochures and the paraphernalia that selling agents hand over to potential buyers, and the fact that the marketing campaigns are being shortened, and there's very little time from when the property is listed to when the property is sold for buyers to do proper due diligence. And we're going to talk a little bit more about that. She's going to give us her insights, her views on that. She's obviously very much into what you and I are into as well, and that is educating the general public. So she's I put the invitation out there on yours and my behalf, and she's accepted the invitation to come on board, and we'll organise for her to have her say. And I think she'd be very insightful. I've been reading her posts. She knows what she's talking about and comes from the conveyancing side of the industry, which is very, very important. And also this whole process of education, because what the government, as I've said in my posts, as I've said in my replies to other comments on the post that I put on LinkedIn, and that is, it is my strong belief that the selling side of the industry hijacked the purpose of what the Dominello with the previous Liberal government wanted to do with regards to making it easier and make reports more accessible. And the industry hijacked it and now use it, and they're worth nothing more, or it's nothing more than a marketing, another marketing tool that they use against the buyers. But unfortunately, buyers don't see it, and they fall for the dirty little tricks.
Absolutely. Well, there are plenty of little tricks below the hood, but we'll continue to expose them. And Edwin, thank you very much for another very insightful rant. I'll look forward to next week, and should be fun. I'll look forward to seeing you then.
Likewise, Martin. All the best. You take care.
Cheers.
Ciao.